So what do you get when job growth stalls and inflation drops? You get a very good week for interest rates. We're going to talk about that and so much more. And the housing market update this week. Let's get right into it with the housing market update. The last full week of December of 2025. That's right. Next week's a holiday week. The week after that's a holiday week. So this was the last week, and we had some really, really good economic news as far as news that impacts interest rates. Start off with the big three. Prices are down. Inventory is down, which is the usual, although inventory in Oahu still remains near 10-year highs. And rates. Yes, rates came down. They didn't come down as much as we wanted, but you know what? Down is better than up, and we will take it. So what were the headlines? Well, home builder sentiment improves. It's still not where we want it, but it's moving in the right direction. Unemployment is at post-COVID highs. Yes, we got that report this week. Inflation drops. What? Say what? That's right, inflation did drop, much to the chagrin of all the naysayers out there who thought that inflation would be higher. And VA rates are now near 2025 lows. And then finally, after we discuss all this, we're going to talk about how to sell your home in a buyer's market. There are a lot of homes on the market. They're not being sold. There's a couple things that you can do to make sure your home gets sold quicker than the others. Well, home builders are still negative, but they're less negative this month than they were last month. And we are at the highest level of reading of 39 since April of this year. You can see July 33, 32, 32, 37, 38, 39. So moving in the right direction. You still see that buyer traffic is still in the gutter at 26. No change there, but future sales expectations were above 50 for the third month in a row. And why do we have that reading? Well, I think it's largely because the expectation that interest rates are going to come down in the coming year in 2026. And we just had the Fed cut the Fed funds rate in December. There's some positive sentiment building for our home builders. So great news there. On Tuesday, we got the BLS, the Bureau of Labor and Statistics jobs report. It usually comes out the first week of the month. Got in the middle of the month, mainly due to the getting the numbers in because of the government shutdown. But some big news coming out here. First, delayed October data was released, and it showed 105,000 job losses. We did see a rebound in November, though, with 64,000 jobs added versus the 40,000 that was expected. Let's look at those numbers real quick. The 105,000 job losses, those are from largely in part to when those people who were working for the government who are furloughed or took the early retirement, they came off the books in October, so you see this big drop. You also see that August, September revision, second time in a row that we had a minus 33,000 revision employment number. So 33,000 for the second month in a row. And actually, if you look at this year, we are already at about 500,000 in negative job revisions over the course of the year. So that's really just saying that part of the jobs report, there's not a lot of confidence in those numbers, especially when they come out initially. You go over to the household survey part of the jobs report, and you see 4.6% unemployment. That is up from 4.4 in September, and the 6th month in a row that we have seen unemployment go up. We are at 4.1% in June, and now at 4.6% as we end the year. This is the highest level since early 2021. So really big numbers here. And where are we going to go next year? Chances are you see a lot of belt tightening from small business owners, from even big businesses. A lot of them are laying people off. We expect to see that continue to go up, maybe get up to the 5% range. And if that's the case, you will probably see the Fed drop the Fed funds rate more than the one time they are expecting to drop it in next year. At least that's what they said last month. Another thing from an inflation standpoint, average hourly earnings fell from 3.8% down to 3.5% year over year. So, we didn't see a lot of movement in mortgage rates. They didn't come down that much, but they did come down, and that's good news for home buyers. So, and this was a report that came out on Tuesday. Good report. Now let's get into the next report, which is the CPI, or the Consumer Price Index. The Consumer Price Index came out, and these were delayed November numbers, but they were better than expected. The CPI eased, the headline eased to 2.7% year over year, which is down from the 3% that was expected. So actually it was expected to remain stable at 3% and actually came down to 2.7%. And guess what? Energy prices hadn't come down when these numbers came out, so there is a good chance that headline drops even more next month because energy prices have continued to come down under $3 a gallon in many states across the United States. And let's take a look at core. Core strips out food and energy prices, but core was expected to stay at 3%, down to 2.6%. That's right, 2.6%. The goal is 2% on core, and we're at 2.6%. That is great news. And one of the biggest reasons was shelter costs, which have been lagging the actual numbers versus what we're seeing in the reports. Came down a lot, down from 3.6% down to 3% year over year. So big decline. And we may see more declines moving forward. There are other rental reports coming out that are showing the rental prices coming down. So really big change, and this really caused interest rates to come down. Again, not as much as we wanted, but still moving in the right direction, and that is lower. That's good for affordability. The other area that really showed weakness in the core, lodging, falling 8% over the last 2 months. These numbers were probably hurt by the government shutdown and just really kind of not knowing what was going to happen, when the government was going to come back to work. Really a good report that came out on Thursday, and we saw interest rates come down a little bit, so good news there. This was a big report for the week. Let's take a look at VA rates. VA rates are now near 2025 lows. We're at 5.87%, so good numbers. And what's going to happen the rest of the year? Again, we got 2 shortened weeks because of the holidays on both the next 2 Thursdays. CPI was the last report, folks, so it doesn't mean rates aren't going to move any more up or down, but they're not going to have any really big swings. Kind of what we see is what we get. I don't expect rates to get below 5.8%. And again, these are on average for VA, not necessarily my rates, but still good news as we end the year with rates coming down. I really think the only thing that may move rates, and it'll be very temporary, will be who becomes the next Fed chair. There is an expectation that President Trump will make that announcement before the end of the year. He won't take over until middle of 2026, but still, there is some anticipation on who the next Fed chair is going to be. So that is a very good week for home buyers and for home sellers. And if you are looking to put your home on the market, here is what you need to do as a seller in a buyer's market to ensure your home gets sold. So stay tuned for that.